Hey guys, welcome back. So on today's episode, I'm going to go over a couple of the stock picks that some of the followers over at my Instagram page at tailoredbyambition have sent over. If you guys want a second set of eyes on anything you're looking at, feel free to leave a comment below or send me a message on Instagram and I will make a video or reach out to you directly and tell you a little bit about what I look for and my thoughts on that company. So let's get right into it. All right, so first one up is Prospect Capital Corporation, ticker symbol PSEC. Prospect Capital invests in other businesses, mostly private equity and private debt investments, and then passes on the profits over to the investors in the form of a dividend. So looking over their income statement, they seem to have a good trailing 12 months here. So they struggled a little bit in 2020, but according to Yahoo, their trailing 12 months looks better than their averages over the last couple years. However, when coming over to Seeking Alpha, total revenue numbers look different than those of Yahoo, so that's something to think about. Something I always look at is the payout ratio, and PSCC is paying out 98%. So that means they're literally turning over all the profits to the investors. So that's something you got to be careful with because they're very close to either lowering their dividends or taking on debt to be able to pay out that dividends. However, they do have a juicy 8.11% dividend yield as of today, and they pay out 6 cents monthly. Another area to check is dividend history. If we look at the 10-year, they're very sporadic, so sometimes they increase it, but most of the times they've been decreasing it in the last decade. So that's what I'm saying, that payout ratio is a little bit close to paying out the entirety of their profits. So that's something to keep in mind. Looking at their balance sheet, they have some nice breathing space between assets and liabilities, which gives us a little bit of confidence knowing they'll probably pay out dividends in the years to come. Some other fields to look at is here on Yahoo is their fair value indicator. So Yahoo has Prospect as undervalued and has 3 green arrows in short term, mid-term, and long term. Their earnings per share trailing 12 months is $1.20, meaning they have earnings of $1.20 per share issued, which is a good sign. It's a healthy earnings. And their PE ratio for the trailing 12 months is at a 7, which is good. So overall, PSEC seems like a decent company. They're not indebted too much. They've been paying dividends out for the last 10 years at least. Their payout ratio is a little bit higher than I like, but I might look to add some of this to my portfolio. If you don't have enough exposure to the finance sector, it might be something worth thinking about. Again, keep doing your due diligence before investing. Don't invest with money that you can't afford to lose. Let's move on to the second pick. So next up we have Sundial Growers. This is a cannabis company. So it's an interesting one here. It's a penny stock. So there's very limited information as far as PE ratio and other different attributes I look for. Now, this whole sector has been very bullish as of last week because of a bunch of statements Amazon and Whole Foods have put out, and I'll make a video about that this week. And I'll cover some cannabis stocks for those who are interested in those. This sector is it's a hot one as well, so let's take a look at the financials for Sundial. So the revenues are pretty flat. They seem to be losing some money here, so be careful of this one. So they have some wiggle room between assets and liabilities here, but it's very early on. Let's take a look over at Seeking Alpha. Yeah, this is a fairly new company, so there's not much data here, but it seems to have settled down at a dollar mark. So unless some good news comes out, I see him staying down there for a minute. Yeah, Sundial's a little bit too risky for me. But again, I've been making a video on other cannabis plays due to Amazon's positive comments about where they see the cannabis industry going in the near future. So I'll go over some of the plays there in better detail. But to me, Sundial is a little bit too new and too small. So it's a very risky play. Okay, so next up we have Hut 8 Mining. This is a Canadian-based Bitcoin and cryptocurrency mining corporation. So I've actually seen the CEO of this company in an interview with Meet Kevin, and I like what she had to say. She's very sharp, and this is an up and coming field, and I think they have a lot of upside to it. So they have a pretty low PE ratio, and they have a decent earnings per share. It's a very small cap company. So this feels a little shaky with some of the comments that Elon Musk did about Bitcoin and the way they're sourcing their energy. So again, this is a very small cap company. So there's very small cap and new. So there's very limited data available on these sites. However, if you do want exposure to Bitcoin or any of the other cryptocurrencies and the blockchain technology and don't want to invest straight into Bitcoin or the other cryptocurrencies themselves, this is one good way to add a little bit of exposure to your portfolio. This is definitely a company I'm keeping my eye on, and this is very early stage. So if you do stick around for the long run, there's a lot of upside to this company, and you can grow your money. So another way to get exposure to this industry is through ETFs, and there's a few of them that have been brought to my attention. There's Block, BLOK, BLCN, and LEGR. So let's dive real quick into BLOK. All right, so their top 10 holdings, which make up 41% of their assets, is MicroStrategy, PayPal, Square, Argo, Marathon, Voyager. Oh, so look, they actually have Hut 8 Mining in it, which is beautiful. So Square has been very heavy into Bitcoin and digital payments, same as PayPal. They've been very positive in the space. Voyager is a broker for digital currencies, and we just went over Hut 8. So I think if you want some exposure to that, this would be a good option. That's a little bit more pricier, but if you want to add some to your portfolio, I think this is a good choice here because it gives you more protection instead of just investing. Now, if you are more risk adverse or have a little bit more appetite for risk and you want to perhaps, after viewing the interview and doing a little bit more research on Hut 8, you want to invest in them, you'll definitely, if this company continues to grow, it's going to be very good for your portfolio. But if you want a safer strategy, then yeah, definitely Block is one of them. Let's look over and see what holdings BLCN has. And these all have the same expense ratio of like 0.68, 0.65. Okay, so you have Square that was also on BLOK timer. So this one's a little bit more, this is even more diversified. So I'll just list these three in order of risk, right? So if you want more risk with the possibility of more returns, it'd be the Hut 8. If you want a more balanced but still aggressive approach, then BLOK would be your choice. And then if you want just more stable, broad with different sectors, you'd be looking at BLCN to get that exposure over to blockchain technology. So there you go, guys. We went over some of the companies that have been messaged to me on Instagram at tailoredbyambition. If you have a company you want me to look at or you want me to go over a certain sector, just shoot me a message or leave a comment below and I'll make sure to take a look at them. Again, I'll be making a video later this week about cannabis and Amazon statement. Hope you guys have a good week. Catch you next time.